The Nigerian Stock Exchange says it has admitted the Lagos State government's 80 billion naira bond into the daily official list. According to the NSE report for the week ended February 1st, 2013, the 14.5% fixed rate Series 1 bond will be due in the year 2019. In addition, 610 units of FGM bonds valued at 76,432 naira were traded during the week in 14 deals. But prior to the takeoff of this program, the NSE held a workshop where Mr. Shinwa Gbejimi of the Central Securities Clearing System at the Nigerian Stock Exchange examined how retail bond trading will afford investors the opportunity to buy and sell bonds on the floor of the NSE.
A lender who doesn't have the view of selling his assets at a particular point in time may decide to lend it to someone who doesn't have the securities but is willing to sell them right away. It obviously is a means of infusing additional liquidity into the market. Transactions are facilitated via agents, and the agents can either act as direct agents or they can act as principal. What I mean is this: the intermediary will be acting as an agent where the lender has identified the borrower and has decided to lend to him and is only needing the services of an agent to facilitate that process. So all the risk involved in that is being borne by the lender. The other type is where the intermediary is acting as primary. I mean, a process where a lender gives the asset to the intermediary to say, well, I give you the responsibility to lend it out the way you deem fit, and then all the risk involved in the process of lending belongs to you. At the end of the transaction, what I want to see is that you put me back in the same economic position that I would have been if I didn't lend out my assets. For each borrowing, there will be a collateral. And for any of these asset classes, the haircut that is agreed by the NSE and the market is stated against it. For equities, if you are using equities as a collateral, the haircut is 130%. For FGM bonds and treasury bills, 125%. And if you are using cash as collateral, that will be 120%. And the borrower is entitled to the economic benefits resulting from the assets.